This is the Growth and Value Podcast, empowering and inspiring stock investors, helping you take control and make a difference with your investment dollars. Looking for quality stock tips? Well, we may or may not be talking about Apple. We may or may not be talking about Google. We may or may not be talking about Disney. However, since we use our proprietary algorithms to screen, analyze, and rank over 6,000 stocks every week, we will be talking about timely investment opportunities. So you may often hear the name of a company you haven't heard of before, and you know what? That is often the best kind of opportunity, an opportunity to get in early before the investing masses. The Growth and Value Podcast is made possible by Connor Management Group, a registered investment advisor firm. Hi everyone, this is Mathis Connor with Connor Management Group, and today we're going to go over a blog post that's accompanied by this video and slide presentation. The title of this post is called How to Buy Stock Like Warren Buffett. Okay, here we go. In this high-tech age where computers become more and more powerful, I just find it funny that the world's best investor, Warren Buffett, has managed to stay on top all of these years. You would think that the deep pockets of Wall Street would have been able to find some high-tech wizards and PhDs in mathematics and engineering with in-depth computer knowledge to trump the guru of Omaha by now. Well, evidently they haven't. Well, what does this tell you? It tells you that the envied and glorified high-tech number crunches with the esoteric equations is not the answer. It took me a while to accept it, but accept it I have. I personally have an MBA and degrees in engineering. I say this to point out that it took me a minute to remember my greatest lesson from our formal education, and it's best summarized as follows. Formulas and concepts may appear complex at first glance, but they have all evolved from some very simple principles well before the age of computers. Therefore, if you can't break down a problem or observation into conclusive simple principles, then you really don't understand what's going on. So no, it's not elegant, but I've treated it as a philosophy that has served me well during my career. So after trying repeatedly to write my own high-tech software and failing to find one that consistently performed, I decided to stop and reassess everything. I literally just said, okay, let's start with a clean slate. So I decided to do some research on the most successful investors around. So I read almost all I could on Warren Buffett, as well as I read about successful investors in Jack Schwager's book, Stock Market Wizards. Along the way, I was always thinking, what is the simple principle to take away? What is the simple principle to take away? These takeaways led me to the general conclusion that evidently there's something to the style of investing called value investing, popularized by Mr. Buffett himself. Furthermore, I realized that the value investing principles were in perfect alignment with the detailed discount cash flow models that most finance-oriented MBAs learn in business school. During all of this reassessment, I kept thinking, just how is it that Mr. Buffett was able to stay on top of his game all these years, and he doesn't even have a computer on his desk? Author Alice Schroeder of The Snowball, Warren Buffett and the Business of Life, a biography on Warren Buffett, has said that she never saw Warren Buffett use spreadsheets when he's reviewing an investment opportunity. She says he just uses pencil and paper, and he manages billions. This observation brought me back full circle to the belief that you can be successful by just understanding a few simple principles. Evidently, the high-tech, complex mumbo-jumbo finance and investing speak is just a smokescreen for not understanding what is really going on. So on to the Buffett trail I focused. And where did it lead me? To an old stock research firm founded in 1931 and is still going strong, called Value Line. That's www.valueline.com. I remembered Value Line was mentioned during my business school studies as possibly consistently providing research that beat the stock market. And now here I was again finding out that Buffett seemingly swears by this service. So I started researching Value Line, and it turns out that they were truly well respected. Here's some public quotes I'm sure Value Line never tires of promoting. I know I wouldn't. Here it goes. I don't know of any other system that's as good. The snapshot it presents is an enormously efficient way for us to garner information about various businesses. I've yet to see a better way, including fooling around on the internet, that gives me the information as quickly. That was by Warren Buffett at the Berkshire Hathaway 1998 annual meeting, talking about the Value Line Investment Survey. In brackets, Value Line is, then, ... the next best thing to having your own private securities analyst, by Peter Lynch, who wrote One Up on Wall Street. And in the last quote, it appears that most investment management organizations will improve their performance if they fired all but one of their security analysts and then provided the remaining analysts with the Value Line service. Fisher Black, professor of finance at the University of Chicago Graduate School of Business. So, is there really a sound reason to reject or rebuff the endorsement for Value Line from not just one, but two legendary investors and the brain behind modern option pricing? I certainly don't think so. And just to let you know, I've been a solid user of both the Bloomberg Terminal Line and S&P's Capital IQ. Both are near standard issues services if you work on Wall Street, and yet I still prefer Value Line. So, how do you buy stock like Warren Buffett? Number one, get a subscription to Value Line. It costs less money than many other research and data services. It's efficient, and since stock research is their primary business, you don't have to worry about biased opinions due to conflicts of interest with other in-house departments. Number two, learn the simple principles of value investing. In my own works, the simple principle of value investing in everyday language is as follows. Recognize that the value of something today is less than what it will be sometime in the near future or tomorrow before others. Sometimes you may hear others trying to define value investing by using the word intrinsic value, which I hate. The phrase intrinsic value has no conclusive definition. Just remember my definition, you'll be good to go. You can always explain it to someone else. So how do you find a stock that is likely cheaper than it is tomorrow? Read the Value Line stock summary reports. Value Line stock ranks, they call it timeliness ranks is their official term, already eliminates companies with potential problems and highlights promising developments that most seasoned stock analysts would readily identify. You don't want to be a seasoned stock analyst, you want to be a savvy investor. So use a Value Line subscription to quickly get a quality short list of stock investment possibilities. Additionally, read a book about value investing. Surprisingly, one of the best books on value investing I've ever come across is also amazingly short. It's called The Little Book of Value Investing by Christopher Brown. On Amazon, you can buy an electronic copy for $12 or a hard copy for $16. And like I said, it's short and it's sweet, and it can't hurt you to read it twice. So number three, how to buy stock like Warren Buffett. Number three, get a subscription to Better Investing. Specifically, that's www.betterinvesting.org. Better Investing is a not-for-profit investment education site. While there are a lot of good things here, including plenty of warm and fuzzy community-oriented stuff, Better Investing subscription allows you to use their powerful and insightful online software tool. They call it their stock selection guide tool. Even if you have a degree in economics, finance, or an MBA, using this tool is a must if you're serious about growing your money. I have no idea why the tool is not more popular. I reviewed it in detail, and all I can say it is hands down the best publicly available investment tool there is, period. What makes it so useful? The tool, one, automatically loads historical data for a particular stock, allowing you to see trends. Two, allows you to easily make projections about the future. But hey, as a hint, just use the Value Line's estimates, unless you know better, as inputs. And three, recommends whether or not to buy, hold, or sell the stock based on the latest stock price. This allows you to quickly make well thought out investment decisions based on the conditions of now, not some research report written one or several months ago. By the way, neither one of these websites is sexy or slick, though Value Line has made some improvements as of late. Quite frankly, they both look kind of boring and a bit of a chore to get through. But hey, as the saying goes, opportunity is missed by most people because it is dressed in overalls and looks like work. You now have some clear and simple steps for buying stock like Warren Buffett. One, we know that Mr. Buffett has been a regular user of Value Line. Two, we know that he's a value investor. And three, you now have a tool to help you make the investment decision. Sounds pretty simple, right? Well, it is. You just have to put in the time to do the work. Remember, Mr. Buffett's office doesn't look like a computerized command and control center you expect from someone successfully managing billions of dollars. This is just evidence that he has been successful by just following a few simple principles. I founded my own managed account money management firm, Connor Management Group, based on following the simple principles of value investing. I've simply computerized these principles to review, analyze, and rank over 6,000 stocks every week to find the best of the best stock investment opportunities. I post one of my ideas, the legal phrase for telling you I'm not telling you to buy something. But I post these investment ideas to my YouTube account, my podcast, and a free newsletter every week. All of them are called The Best Stocks to Buy. And that's my way of getting the word out. So while my office isn't as old school as Mr. Buffett's, I'm happy to say that in this ever-increasing high technology age, I now only use a single computer monitor. I do my best to buy stocks like Mr. Buffett by following just a few simple principles. My name is Mathis Connor. I'm the founder and chief investment officer of Connor Management Group. I'm a managed account money manager. I welcome your questions at Mathis, M-A-T-H-I-S, at Connor, CONNERMG.com. You can get to know my firm by visiting our websites, www.connormg.com and www.best-stockstobuy.com, as well as by subscribing to our free newsletters. I hope you found this helpful. Take care. Hi, this is Mathis Connor from Connor Management Group, and I just wanted to take a few more minutes to give you some background about myself and Connor Management Group. First of all, if you enjoyed this podcast, and I hope you did, and you have been over the past few months or so, please write us a review on iTunes and Stitcher. We really would appreciate it, and it would help us get more subscribers. So that's something we'd appreciate. So for the podcasters out there, please go to Stitcher or iTunes. And for you guys on YouTube, I'd appreciate thumbs up and like, as well as just becoming a subscriber to the CMG Stock Picks channel. All right, well, that's what I wanted to say with regard to the podcast and YouTubers. Hey, try to be efficient. But I wanted to share a little bit about myself. Basically, I've been told from some friends and listeners that know me that I could enlighten my audience with a little bit more about myself. So I'm not all that comfortable with telling about myself. I really kind of want you to enjoy the content. But for those of you that have an interest, this is why this stuff is all the way at the end. So, okay. My name is George Mathis Connor. My background is that I have a bachelor's in mechanical engineering from a place called Rensselaer Polytechnic Institute, engineering school in upstate New York. A master's in engineering from Cornell University, also in mechanical engineering, and I have an MBA in finance from the University of Chicago. So hey, that takes care of my educational background. Basically, bottom line is to see, I did a lot of schooling. What my career experience has been to date. I started out my career as an engineer, did a few years of that. Worked on a lot of cool landmark renovation buildings in New York City for a few years. One of the most high-profile ones was my company, or I should say the company I worked for, was part of the renovation team of Grand Central Terminal. So for those of you that passed through there, I've spent a number of years in and out of every cranny of that building and facility. I also worked as a banker in New York after I got my MBA. And basically, I worked on financing a lot of large-scale infrastructure projects, mostly power plants, but I worked on some basketball arenas as well, and some chemical plants, and even some coal mines. I've been deep down in the ground a number of times in my career. Additionally, let's see, after that, started working on the investment side of developing power plants, and particularly I spent most of my career with a company called Enron and another company called GDF Suez, where I worked on the development of power projects where where I acted as a equity investor for whether we were going to build them or buy them or sell them. And after GDF Suez, I am now an investment manager, and basically, I've been studying deals over the years, learning to build complex financial statements, always evaluating them, the cash flows, and making sure that these things will be profitable. And investing in the stock market was always a hobby of mine that I took more and more serious over the years. So after a bunch of time, I just, I'm really going to go after this. And so I spent maybe about, 3 years actually working on the development of some proprietary algorithms. I was just convinced that with my mathematics and computer background, coupled with all these financing deals, of which I became very good in with accounting and finance, I thought that I could at least find one way of consistently finding stock opportunities. So it was the development of these proprietary algorithms and me having some success with them that led me to the development of Content Management Group and the development of all these videos and podcasts you've been seeing and hearing. And, I am pretty happy with these algorithms. Basically, they review, analyze, and rank over 6,000 stocks every week. They're pretty comprehensive and pretty thorough. The algorithms use fundamental technical analysis and also consider some macro level measures. And another thing that's pretty unique is that these algorithms estimate future stock prices with specific time horizons. I haven't seen too many people on the web that will give you a potential stock price, say consistently say this is what we expect the price to be in 6 months, or this is the price that we expect there to be in 12 months. And I think for most of the videos and podcasts that I produce, you've always heard me give a potential stock price going 12 months out. The premium subscribers actually give them a stock price for the top stock prices for 6 months out. So that's about what I have to say about the algorithms. Additionally, about Content Management Group, our primary offering of CMG LLC is that we are a managed account service. And basically, a managed account, for those of you who don't know, is basically a more hands-on, customized way of investing for the long term. It's basically a complement or a supplement to 401k or IRA and it has more benefits. And basically, you probably haven't heard of these as much or over the years because they've just become a lot more available to middle-class investors. And that's primarily because of advances in software for being able to handle many clients and move them in and out of custom portfolios and options. So if you want to know more about our managed account business, please go to ConnorMG.com. That's www.connormg.com, or you could go to our website and you can see a presentation that compares Content Management Group side by side with other managed account providers. E-Trade provides managed account service, Fidelity does, a lot of other mainstream firms. And like we said, basically now that technology is advanced with software, it's a lot easier to manage. So basically, as with E-Trades, the minimum size of account we open, say $25,000. And while as I'd say 10 years ago or more, minimum account size was probably $500,000. So there are a lot of changes, and you'll be hearing more and more about this account service, as time goes by. Additionally, let's see. Additionally, you can get to know us through our social media footprint. Basically, we have a presence on all the major websites for your convenience, and there you can get a lot more articles and hear about different points of view on things going on in the market. So we have a presence on Twitter, Google Plus, and Facebook, as well as LinkedIn also. So you can be kept abreast of our thinking on stock investing, as well as things we share by others who we consider thought leaders. And finally, CMG offers 2 newsletters, both weekly, 2 weekly newsletters. One is to keep investors up to date about relevant news and provide in-depth analyses on a quality investment opportunity. And those opportunities are consistent with the free weekly podcasts and videos. And the other newsletter we provide is our premium newsletter, and that one provides the latest top picks from our proprietary algorithms that we run every week. So, feel free to go to cmgstockpicks.com, and you can go there to subscribe to the newsletters. And if you go to the website, you can also view this deck and or any of the decks going forward, and there'll be a link there to everything I've just talked about. Basically, everything from the podcast to the newsletter to the presentations about our managed account service. So, hope this was helpful. Nice overview. Hope it didn't bore you. You can listen to this a couple times. That's why I put this at the end of the stock presentation. And I'll talk to you soon. Take care. Bye.